Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month nickel. The main pattern that has developed here was the December 25 to March 26 bullish shift pitchfork. That was until 3 weeks ago when prices breached and then broke down through the lower tie. It's currently 18,660. What looked like a bearish halfway hesitation pattern, giving an initial primary target down in the 17,315 zone. Target was reached last week, and a secondary hard reach target X down in the 16,290 zone, which was below the low of 2026 at 16,380, but which was reached today. Now, I also spoke about this current move lower 3 weeks ago when I said, and I quote, "What seems to have evolved from this move lower is a fairly acute, bright pink, bearish Andrews pitchfork. Price is now close to the steeply declining bright pink middle time below, currently 16,680, end of quote. This is still the case today, with prices a little under the bright pink middle time. I carried on at the time and I quote, whilst this seems to be an active and dominant bearish pattern, it's worth remembering that a little farther down we have the combination of 50% Fibonacci line of the April 24 to May 25 move and the October 2019 high at 17,810. Now that is all very well, but if on the other hand, if we consider the whole mid-April today action as one very lopsided double top, Adam and Eve type, then we have potentials, not targets yet, but potentials below the 50% combination of a primary potential in the 17,725 zone and a secondary hard reach potential down in the 17,225 zone. I suspect I will be next week, so that's now 2 weeks ago. I suspect I'll be either have these potentials as targets, reached or unreached, or I may retire them. I'll be interested to see which, end of quote. Well, prices did carry on lower, enough that both the primary and the secondary harder reached potentials for this halfway hesitation have been reached. I then added last week, and I quote, "We now need to start looking at 3 separate but close together supports below. The slowly rising gold long moving average, currently at 16,845, the 50% Fibonacci line for 25-26 move at 16,935, and the bright red neckline extension, currently 16,545, of the July to November 2024 head and shoulders top. Of these 3, I suspect the bright red neckline extension might be the more useful support," end of quote. Well, we easily reached these supports, and today it looks like we have bypassed them lower. So what now? Well, we obviously have the bright pink lower tie to consider, which is currently at 15,695. That's a dynamic one as it heads lower, as well as the combined November 23 plus January and February 23 lows, all at 15,845, and also the 2021 low at 15,665. However, I would also consider from last year the key breakout levels at 15,840 and 15,665. Remember them? Yet there is something else that may make these pale into insignificance. You see, we could look at the whole mid-December 2025 today action as a very large double top pattern, even Eve type. If this becomes true, then the opportunities on the downside are quite considerable. The bright red neckline previously mentioned could also act as a neckline for the very large double top, in which case we have breached it today and are on the verge of breaking it, thereby giving a primary target X1 down in the 15,155 zone, for secondary hardest reach target X2 down at the bottom of my daily chart at 13,305. I may have been a bit presumptuous with labeling them as targets, as we haven't fully confirmed the patterns yet, and it is asking a hell of a lot. But I suspect if I left it too long, it may have been too late. So there you have it. LME 3-month zinc. We're still here on this daily chart for a 8th. Let me get this right. 8th week. Still within the same big old pattern. It's a big one, plus a more recent smaller pattern. The big old pattern is the bright red May 23 to April 25 bullish Andrews pitchfork, and especially the middle time, currently at 3,500, which the market is straddling today, or had been straddling today. Then there is the slightly more recent second pattern, the dark blue April 25 to March 26 bullish Andrews pitchfork, with the market a little above the slightly more acute rising dark blue middle time, currently at 36.01. Sorry, slightly below it at 36.01. There was also another newer pattern, unhighlighted, that has been completed by breaking lower below the April to late June bull channel. It's quite a wide broken bull channel, and we only stabilized below it last week. Nevertheless, as I said last week, and I quote, it does give us the possible targets below of a primary target X down in the 34.73 zone, arguably a target which was reached 2 weeks ago, but I'm going to keep it open as that was just a breach lower rather than a break lower, along with a secondary harder to reach target X1 down in the 33.58 zone, in between two important 50% Fibonacci lines. Well, we have fully reached target X at 34.73, and we came close to target X1 if it wasn't for one thing. You see, the action since early May to date initially set up the opportunity for a triple top, if a somewhat ragged one. That's come from the bull channel to a triple top. And that's with aspects of a head and shoulders top about it. This pattern depended on one thing as a confirmed break below the 34.40 zone, which so far we have not had, as prices only made one clear close under it and only one on it. Plus the mauve medium moving average, currently 33.97, stepped in as a support, knocking prices higher with an unusual daily key reversal up on Friday last week. However, that was not the only news. You see, this original bull channel, which became a triple top over May and June, has morphed yet again into a bright green descending expanding wedge pattern, currently 33.77 to 36.40. This pattern has already had the requisite number of touches per site, so I'd watch very carefully for which way the market breaks out of this pattern, and be especially cautious about force breaks in either direction. LME 3-month tin. In the big picture, the market here since March has been moving up from a very shallow, bright red middle time below, currently at 41.465, up to the very shallow, bright red upper time above, currently at 58.885. And that's the one big old pattern, still even now dominating this market. And that is the bright red, shallow, big old 2020 to 2022 bullish shift pitchfork. A pitchfork that is still in operation 4 years after it was created. Most recently, the market has seen the possible creation of an early May to date head and shoulders top for bright pink neckline, currently at 51.005, which last week we were on the verge of breaking lower, and so far, a week later, haven't done so, and may be considering not doing it at all right now. I nevertheless last week said the following, and I quote, I feel obliged to set out possibilities, not targets you understand, but possibilities, as we haven't confirmed the break lower as yet. I would rather have some numbers out there in case we do see a true break lower in between my commentaries. Thus a primary possibility be down to the 47.310 zone, but secondary, harder to achieve possibly down in the 43.660 zone. End of quote. Right now they still seem to be possibilities, and I would treat them cautiously as such. Now, this is all very well, but I would again draw your attention to an item I discussed 9 weeks ago when I spoke about a piece of congestion which has become very relevant in mid-May, mid-June, and again last week and this. And I quote, I would look closely at the 2022 high at 51.005. This may not look that great congestion at first glance, but it was instrumental in making the center of the double bottom in mid-February. Would thus not ignore it. We also have some Fibonacci levels for the whole of the 2026 move at 47.595, 99.775 and 51.960. End of quote. These levels, especially the 51.005 level, have become very important in recent days. So, we still have the makings of some layered support starting from 51.005 and heading lower, whilst above we have the green short medium moving average currently at 52.665, plus all the congestion from May and June of a head and shoulders pattern, a pattern that seemingly has not fully recognized if it is a head and shoulders top or if it is a head and shoulders continuation pattern. So caution for any false breaks. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.